Tuesday, March 21st. Hope everyone's doing great. Yesterday we had a decent rip in the market, right? We were talking about that 39.50 area to see if that can hold running up into the 39.90. And today we're going to talk about some similar key levels that hold on into the S&P 500 futures. But before we do that, let's take a look at what's going on with some of the news that shaped up. We have some of the news that comes out of the FDIC talking about bank deposits, especially with everything going on in these financials. And we're seeing that officials at the U.S. Treasury Department are reportedly studying ways to guarantee all bank deposits, right? We'll see how that happens realistically, because that is, well, realistically, banks themselves shouldn't be failing like this. So it shouldn't be that big of a risk issue in terms of how much capital is required to make these bank deposits whole. But the fact that they want to do this again is still very worrisome. There is still a lot of risk involved in this industry. So if tremors in the banking system spiral into a full-blown financial crisis, they do want to make sure that those deposits are whole, which involves, again, more printing of the money. As we saw last week, they did undo a lot of QT, right? $300 billion in QE was undone pretty aggressively in just 1 week. So authorities don't yet see full FDIC coverage as necessary, but they are exploring the legal framework using emergency powers that wouldn't require passage through a deeply divided Congress. And the fears are that if there is another regional lender that fails, which could be the case, because again, Bloomberg did look at about 200 banks that are in very similar situations that we saw some of the banks last week. There will be a run on deposits at smaller banks, knocking the industry over and sending billions of dollars to their biggest competitors, which is, again, what I believe is probably going to happen. So the FDIC has already backdropped the uninsured client deposits of Silicon Valley Bank, SIVB, and Signature Bank, while the crypto-focused Silvergate was left to liquidate, and Credit Suisse CS is rescued by Swiss authorities and UBS. So some support is building for a motion to guarantee all bank deposits as a fifth bank. First Republic FRC teeters on the brink of insolvency, right? The shares in FRC fell about 47% on Monday after multiple downgrades by the S&P, but recovered about 20% right here pre-market as investors swallow an aid proposal led by JP Morgan CEO Jamie Dimon, naturally. So where do things stand right now? Some Republican lawmakers like Patrick McHenry, chairman of House Financial Services Committee, are weighing changes to the current $250,000 FDIC insurance cap, as well as Democratic ranking members Maxine Waters. And some others are more against a universal guarantee on all bank deposits, like the conservative House Freedom Caucus, which feels that the dangers precedent that simply encourages future irresponsible behavior would be paid by those that are not involved who followed the rules, which is exactly what I was thinking as well in that sense, right? Why are they allowing these guarantees and making sure that future guarantees are still there while all this is going on? So I don't necessarily see um, the gain in this realistically. So we'll see how this goes and where this goes. But in terms of all these financial and banking sectors and regional banks, there's a regional bank ETF IAT that you guys should check out, see how that thing is doing. But overall, today we're 1 day away from the Fed, and that's another thing to talk about. The Fed, we'll talk about this tomorrow morning, but the Fed realistically has multiple different possibilities rather than just the black and white 25 basis point hike or no hike at all. There's even the chance of a potential cut, some might say, and a 50 base point hike. So there's four general options. They are very low probability on the other extremes, but still something to consider. IAT, regional bank ETF, is up here pre-market. A lot of the banks are up here pre-market with the overall S&P up here pre-market pretty aggressively, trying to run into that 400 area. On the futures, you do have a key region that sits at that 4023.25 area that we do have to keep in mind. That is a key ledge on the distribution block that everyone has to keep an eye on. So when we're talking about that, in terms of these futures, you have to look at that 40 23-25 region. That is the cap for the bulls. Realistically, if they go above that, they're probably going to run to 41.05 before you see any real selling, realistically. But this is the first area that I'm going to be probably entertaining some of these shorts, see if we can bring this thing down. But as long as the final dance holds above 39.90, I think the longs are still in. First area of interest is going to be down into this 40.0502 for all the bulls to watch realistically. But I want to see what happens into this 20, into these mid 20s for any sellers to come through this. There's still some bullishness. Yesterday we were talking about looking for some calls into the FOMC that are doing pretty good right now. They're up pretty aggressively, but I'm going to be watching this today. As tech, there was some weakness in tech. If tech becomes weaker again, we could see that pull down into the FOMC. But I think just watch until the FOMC. I think there is still a run up into the FOMC. Then after the days after, we get some kind of sell. Not to mention, speaking of tech, some of the tech layoffs continue. Amazon eliminated about 9,000 jobs yesterday. Well, they announced it. They're going to do that in the coming weeks, marking the latest round of job cuts that adds to 18,000 layoffs announced in January. So the new cuts are mainly focused in AWS, advertising, Twitch, and people experience, as well as technology solution divisions. And given the uncertain economy in which we reside and the uncertainty that exists in the near future, we have chosen to be a more streamlined in our costs and headcount. This is what Andy Jess said, the CEO, declaring that he didn't want to, as to why he didn't want to announce both batches of layoffs at the same time. So Amazon's total headcount more than doubled from 2019 to 2021, peaking over 1.6 million. So as a close of 2022, total headcount dipped to about 1.54 million, still employing a lot of people. So today, the FOMC meeting does begin. We have existing home sales, and those are the main things that we're going to watch for. I think it's going to be a slower movement on the session itself, just like we saw yesterday. Yesterday was just like a slow grind to the upside as we did hold into a key distribution block. So let's see what else we get. Um, I I would lean bullish into the FOMC. I am leaning bullish into the FOMC. Small positioning, small size. Today, you gotta be very cautious with the movement. It can be slower. I want to see dip and rips again, slower, but the general movement to the upside. See if these buyers can still hold this out. I think there's a lot more buy side. Some people are trying to get short tech today, tomorrow, into the coming weeks. I think that that move is going to come, but FOMC, we gotta consider that as well. So, thanks, Andrew. London futures, over the London session, we did see some buy side. Uh, I think pre here in the early session they try to fade them, but I think the bulls are still strong. Yesterday's bid was pretty shit, to be honest with you guys. It was a stinky bid, but there was no offer, there was no sell. So this little stinky bid might continue until the real sell side comes in. So it's something to watch for. I don't think the shorts are too happy just yet, but in the coming days, especially after the FOMC, I think they mark their territory and make a move. So I hope. What is this? Sweater. Hope everyone's excited for the trade day, especially the FOMC. We're going to be trading the FOMC live with our group at TradePro Academy. So if you want to go check that out, you can check out the futures room again. If you want first month 20% off, use the code VIC20 VIC20, and you'll get the first month 20% off at our futures room where we do talk about trades, trade news events, so on and so forth. We'll be doing that, and check us out. So let me let me check the FOMC Fed Watch futures. I don't know what you mean by London futures. Um, right now, there's an 85% chance of a 25 basis point hike. There's a 15% chance of no hike whatsoever, no change. I think people are misjudging the fact that there's a small percent chance that we see 50 or even a cut. It's something to watch out for sure. I don't think these are the only two possibilities. I think they're probably going to hike 25%. That's pretty much priced in. It's a very high probability they hike 25%, but I wouldn't discount the other possibilities, especially with what's going on right now. So with that being said, check out community.tradepro academy and I'll see y'all there. Yeah, VIX is down because the market's up. There's still bullish. Like I said, I think there's bullishness in this market on the short term, very short term. So just keep that in mind. So I'll see you guys tomorrow. Thank you and take care.